Welcome back to the channel. 2021 has been a crazy year. COVID, new variants, the consumer price index in the US hitting 6.8% in November versus the same time last year, and in the UK just under 5%. So it's never been more important to now start investing into the stock market. Now, there are many ETFs that you can find out there on the market, but some of the very best ETFs are from the fund manager Vanguard. Now, you don't actually have to buy these ETFs that I'm about to talk about today from Vanguard. You can find them with other online brokers. Do make sure to double check that they do have these ETFs before you sign up with the account, and also make sure that you are getting a tax-free account. In the UK, we actually call this a stocks and shares ISA. For those that don't know what an ETF is, an ETF is basically a basket of stocks that basically mirrors a specific index, whether that's the S&P 500, Standard & Poor's 500, which is effectively the 500 most valuable companies trading on the US stock market. So companies like Apple, companies like Facebook, companies like Microsoft. And basically these baskets of stocks can be bought and sold on the stock market as an ETF. Looking into 2022, predictions are that inflation will start to cool off in 2022. And if that does happen, that means that the stock market might have a big rally. So investing in a very well-diverse ETF is definitely a very good bet. So what are the best Vanguard's ETFs to buy and hold in 2022? Well, first up is the Footsie Developed World ETF, ticker VEVE. Now, this is an ETF that tracks a global index called the Footsie Developed Index, and thus the ETF invests in 2,200 companies across the world. So it's really diversified. Keep in mind though that 66% of the ETF is invested in the United States. So if the US stock market doesn't perform so well in 2022, this can definitely have an impact on the returns that you'll get with this ETF. Other things to consider is that the top 10 holdings of this ETF are all US companies, and about 25% of this ETFs are invested in tech companies. It does have an ongoing charge fee of 0.12%, which is great. So that shouldn't eat too much into your returns. You know, fees are very important when it comes to investing in ETFs. You want to have the most minimum fees possible. The higher the fees, the more it eats into your returns. Its returns over the last 5 years have been nothing short of stellar. So in 2016, it returned 24%. 2017, it lost less than 1%. In 2018, it returned 14%. And in 2021, it returned 21%. These are great returns considering the S&P 500 on average over the last 100 years has averaged about 10% returns. Fundamentals are looking quite good too. It has a price to earnings ratio of 20. What's important here is that price to earnings ratio is lower. It means that effectively the ETF is relatively cheaper. So this price to earnings ratio is actually lower than S&P 500, which is great. And the price to book ratio of 2.9 is also below the S&P 500's price to book ratio. The earnings to growth rate is decent, but this is below the S&P 500. So talking about the S&P 500, that is next up on the list of the best Vanguard ETFs to consider investing in 2022. Ticker symbol VUSA. Now, just as a name, this is an ETF that invests in the S&P 500. So all the businesses that comprise the Standard & Poor's 500. I already mentioned some of them: Apple, Microsoft, Nike, etc. It's basically the 500 most valuable companies trading on the US stock market. So it's also really diversified with about 500 companies. It's just not as diversified as the Footsie Developed World, which has about 2,200 companies. Obviously, with this ETF, it's completely invested in the United States. So you effectively live and die by investing in the United States. If the United States perform very well in the stock market in 2022, then this ETF should also perform well if the United States stock market doesn't perform so well in 2022, then this ETF will suffer and your returns will suffer with it. Keep in mind that the tech exposure is a bit higher at 29%, and the top 10 holdings of this ETF is very, very similar to the FTSE Developed World as well. Fee wise, it's much cheaper than the FTSE Developed World at 0.07. So you are saving as much as possible of your returns, which is great. As I said, we want to have as low fees as possible. Its return over the last 5 years have also been excellent. Look at these returns. 2016, it returned 22%. 2017, returned 5%. 2018, it returned 16%. 2019, it returned 17%. 2020, it returned 28%. These are fantastic returns, and we could very, very well see these returns continue in 2022 and beyond. Its fundamentals ratings are slightly higher than the FTSE Developed World, so this effectively makes this ETF more expensive valuation wise. It has a price to earnings ratio of 24, which is actually higher than the developed world, and it's also higher than its mean average of 16. It's definitely more expensive. The price to book ratio of 4.5 is also above its mean average of 2.9. So relatively speaking, you are paying more to buy the S&P 500 today. However, I don't believe in timing the stock market. I believe in consistently investing every month into the stock market, which is also known as dollar cost averaging into the stock market. I guess the idea with that is that if you are buying it expensive now and it does become cheaper in the future, and if you invest consistently, it means you also get the opportunity to buy it at a cheaper rate too in the future. Third up on the list is another global ETF, and this one is actually called Footsie All World High Dividend Yield ETF, ticker VHYL. If you'd like to receive some dividends every 3 months, then this may be the ETF for you. So this ETF actually also tracks a global index called the Footsie All World High Dividend Yield. Very, very original. It's basically the same name as the ETF. So it's also very highly diversified. It has about 1,857 companies across the world. Keep in mind though that only 40% of this ETF is invested in the United States. So not as much as the FTSE Developed World. So it's a little bit more balanced compared to the other ETFs. The top 10 holdings are slightly more varied. We do have a few more companies across the world, but it's still dominated by the US companies. The surprising thing here though is that 25% of this ETF is in financials. So that's where it really differs with the two previous ETFs. And this absolutely makes sense because you've got companies like JP Morgan, which likes to pay dividends to their investors, whereas companies like, your Teslas don't really like to pay dividends to their investors, which is why Tesla probably wouldn't even be part of this ETF. The ongoing charge fee is higher, so that is something definitely to consider. It's at 0.29%, so it's much higher than the other two ETFs. So it has to seriously perform well to justify this. The saving grace here is that it does have a higher dividend yield at 3%. So you could clearly just keep on reinvesting that, and then your returns could compound over time. So there is definitely food for thought there. Its returns over the last 5 years, it has lagged the other two ETFs, I can't lie to you. But that's probably because of the high fees. So it's definitely something to consider. But with interest rates set to rise over the next year, some of the big banks, like I mentioned, JP Morgan, they could get more of an income, and thus possibly they may raise their dividend yield. So you could see a good return of this ETF in 2022. Its fundamentals are looking quite good too. In fact, it's much better than the FTSE Developed World and S&P 500. It has a price to earning ratio of 13. which is below the S&P 500, and a price to book ratio of 1.7, which is quite low. That's also below the S&P 500. The earnings isn't growing that fast. It's not growing as fast as the other two ETFs, so that is definitely something to consider. I guess with the earnings growth, you normally also would see, you know, some dividend growth, and if the earnings aren't growing that much, then maybe the dividends yield might not go that much. But again, in 2022, I think that they have a good chance of this ETF doing well, especially if the interest rates rises and these big banks start to increase their income. So those are the 3 best Vanguard ETFs to buy and hold in 2022. Let me know in the comments below which one is your favorite and whether you are going to invest in them, or you're already invested in them, or you like another Vanguard ETF to invest into. If you do enjoy content like this, make sure to hit the like button for the YouTube algorithm. Also subscribe to the channel. If you do want some free stock with either Trading 212 or Free Trade, click the link in my bio, deposit £1 and you'll get your free shares. It's been great chatting with you, and I'll see you in the next video.